Hey guys, welcome back to my channel. If you're new here, welcome. I hope you stay. If not, welcome back and thanks for coming. So today I've got a bit of a different video. Hopefully you've already read the title. I'm sure that's why you clicked on it. But today I'm going to be going through some kind of myths or statements that I've heard on social media regarding property, home ownership. So they fall into that realm. And these are things that are somewhat true, somewhat false, somewhat in the middle. I'm going to discuss them, dispel any incorrect statements. So if you're interested, make sure you comment, like, subscribe, make sure you stay tuned. So let's get straight into it. So I have the statements listed here. My phone. I'm going to go through them one by one. Hopefully it won't take me too long. I don't want it to be a long video, but I just wanted to make this quite informative. So I'll link any useful links that I think people should read down below. And yeah, let's get straight into it. So the first one is credit score is most important when buying property. I think this is something that has become in the past few years somewhat a main focus when it comes to buying property. This is within like the industry of lending as well as for borrowers. People have become more focused on credit worthiness. So that's why there's more of a push on credit scores and things like that. Where I think people are perhaps becoming a little too over-focused or obsessed over credit scores is the kind of overlooking of other factors. So yes, credit scores are really important in terms of how creditworthy you appear to lenders and essentially how likely they are to lend to you, how much of a risk they deem you to be. There are other factors such as your salary, your deposit, the LTV on the property, the market, the actual property. So there are other factors that are really important as to whether or not you'll secure that property in the end. So I don't think these should be overlooked just because you are focusing on having a perfect credit score. Because for example, someone with a really good credit score won't necessarily get lended or lent, can't speak, won't necessarily get lent less than someone who has a perfect credit score, for example, because maybe the person who has a good credit score earns more. So they're more likely to get lent maybe the amount required to buy a £600,000 house with a £100,000 deposit versus someone who is earning less than that and they are trying to go for the same property. Just because your credit score is perfect does not necessarily mean that you'll be able to afford the same property as someone who has a lower than credit score with a higher salary, for example. So there are other factors that really come into play, and it's kind of like a juggling act when it comes to what you can afford in the end. I do recommend, though, people do focus on maintaining a good or perfect credit score just because it makes you a better candidate for a loan, essentially. Just make sure that you follow the tips that people give out. So make sure you don't take out high value loans. Don't use the whole balance on your credit card, for example, and leave it unpaid. Make sure you pay your bills on time. These sorts of things will help you really maintain a good to perfect credit score. However, don't only obsess over that, making sure that you get 999 in Experian when you're earning £10,000 and you want to buy a £600,000 house. It's not going to work. These things are, we need to think about how they all link together. So yeah, that's just my 2 cents on that. Anyway, the next one is go for the longest fixed term interest rate mortgage. Now, this one's an odd one because it actually is okay advice right now considering the context. I heard this in a Clubhouse discussion. However, I think there wasn't enough detail as to why this advice is okay for right now. Right now we have low interest rates, okay? So when we have low interest rates, it might be better for some, well, it is better for many, to lock into a lower interest rate before interest rates increase. Okay, so if you're locked into, for example, a 2% interest rate today for 5 years, that means for 5 years your interest rate will not increase. irrespective of what happens to the interest rate that the Bank of England sets, and like the mortgage lenders kind of use that as a basis. So if, for example, the interest rates increase as we recover, as the economy recovers, maybe in 2 years' time, the interest rate on that same mortgage for your property might be maybe 6%. Okay, this is a big exaggeration, but it might be 6, 7%. Okay, so what happens then is you have basically saved in terms of where you would be at if you had got that mortgage with the market rate 3 years down the line. So you're better off, essentially. Did I say 3 years? I think I meant 2 years, whatever it was. The mistake that was made was the lack of context. So there was no context as to saying now it's okay to do this. If someone was to listen to that advice and then carry it forward maybe 3 years down the line, we've already recovered, and then gets locked into a high fixed interest rate, it's not as useful. I think that's where we need to distinguish between the two and identify that, yeah, it's really important to note that this is within this context, this is in today, essentially. Does that make sense? Hope that makes sense. I was going around the point a lot, but basically what I'm trying to say is it's only good advice for right now, and it isn't something that should be taken forward or outside of that context. So I think it's really important just to think about it a bit more and not just take this advice and run with it. Though it was good advice, I guess, for now, you just need to think about yourself and how it works out for you. This one, I don't know why someone felt brazen. I don't even know what to call it. So why someone felt brazen enough to make this statement. So this person said, buying property is like renting from a bank. Guys, I think this one is, I get why people might say this. I get why people might think this. It's similar in the sense that you pay something every month. I mean, that's as far as it goes. But in terms of it being the same and somehow the bank being your landlord, I don't get the link. So when it comes to buying a property, essentially what happens is you might go and get a mortgage, a loan essentially, to buy this property, and every month, as long as you don't have an interest-only mortgage, every month you pay off some of that capital and you end up with equity in that property. So at the end of your 25-term mortgage, essentially 100% of that equity, i.e. the market value of that property, is now your asset, okay? Fine. When it comes to renting, however, when you rent, all you're doing is just paying that expense for the month, just for the place in which you'll reside for the month. And you'll do that every month for the full lease that you have. That's the main difference. You do not get a property at the end of it. You do not build any equity. Nothing actually happens other than you just pay your rent. There's a lot of flexibility in that. You can move more frequently without having a big kerfuffle over selling your property and stuff like that when it comes to renting. See, there are a lot of benefits with one versus the other and vice versa, but they are not to be conflated. They're not the same thing, guys. They're not the same, okay? This one is very, very commonly mentioned recently. And this is that it is better to buy in commuter belt. And I understand why people are saying this. I understand that there's a lot of discussion around this, just because right now we know that London house prices, they're not right, okay? They're not right. We know that they're really high, we know that they're just not acceptable. My personal opinion is that someone should not go and buy in the commuter belt because they've been advised to, or because people believe that somehow the commuter belt is going to become more high value than London. I don't know. I understand why people say this. A lot of people perceive London house prices to be more volatile. However, I think people like to think that, within the commuter belt, they are a lot of the time high growth areas. But again, they do not tend to get to the value that London properties get to. I think there are many other factors to be considered before you go for a property in the commuter belt because someone said you should on Twitter, basically. Maybe you plan on having children soon and you want to know that you're in the right catchment area for good schools. That's an important factor. accessibility to train stations, accessibility to London, for example, I don't know, jobs, things like that. Those are really important factors, so don't base it solely on the advice that people give you. Okay, next one, I think is the last one. Yeah, number 5. So this one, I think I might have been someone who pushed this myself, so I'm a bit of a hypocrite, but I never use the term scam when it comes to it. So a lot of the time people say Help to Buy is a scam, Help to Buy is a scam. I don't know what they mean by the word scam, I don't know how they're using it in this context. In my opinion, when both parties are completely aware of the terms and conditions of whatever the purchase or transaction is, I don't see how that can be considered a scam. I do personally feel that a lot of Help to Buy properties are a rip-off. They tend not to be in line with other properties of similar spec. That is as far as the scam goes. A lot of people say that the aspect of, after the 5 years, the interest rates from the government loan kicking in is also a scam. You'd usually pay interest on any sort of loan that you get. So I don't see how that's specifically a scam. I guess if you want to say that the interest rates aren't in line with market value loans, fair enough. But I don't think that alone is a scam. I actually think I think Help to Buy is a great way to get on the property ladder with a small deposit or a lower salary. However, I do understand why people might think it's a scam, but I think it's something that people need to really assess and see if it's worth them going for. Really think about whether or not they're happy with the terms that they're going into, because there are a lot of restrictions when it comes to Help to Buy properties. There are a lot of other aspects that you need to consider. People can deem them to be restrictive in terms of what you can do, like, I don't know, letting out the whole property. You're not really allowed to do that. So there are some things that can be quite significant to some people that may provoke them to think that it's a scam. However, for me, I don't think it's fair to call it a scam. There are other affordable housing schemes that I believe to be scams, but that's not up for discussion in this video. I just don't think Help to Buy is the one that I would deem a scam. So I think it's important to just make sure you do your research. Just a caveat here, I'm only talking about the current Help to Buy scheme. I know there's a new one coming in next year, but I'm only talking about the current one. So it's important to do your research and really understand whether or not it's for you, but not to be dissuaded or discouraged just because of what other people may say. I think it's a great way to get on the property ladder, and it provides good accessibility to it. So hopefully you enjoyed this video, you found it informative. Like I mentioned, I will leave all information and links down below. Hopefully you enjoyed this video, so if you did, make sure you give it a like, and I'll see you in my next one. Bye guys. Thank you.